So basically, I had a bunch of people DM me like, why am I not taking plays like right now? Why am I being
Mhm.
super slow and super cautious? First of all, for the last like 2 weeks, we've been in a straight chop, right? And all that's gonna do is create more decay for us. And if we load up we'll just load up like a regular RSI. Strength is falling.
Are you screen sharing?
Oh wait, the recording, but I'm not screen sharing. Yeah.
Uh,
Okay, basically, the market's getting a little weaker. I mean, until like the last couple of days where we bounce back up. We're getting weak and we're just seeing a chop, and we're waiting for a lot of economic news still. So it just doesn't give me a lot of confidence that to like play like right here on any of these days, just because I know this chance for a strong breakout and a rally like this is just less likely. And if
mm,
I continue to enter positions here, I'm just gonna get chopped and decayed. So if I just enter a couple leaps, but basically it's all about like with options especially, timing is very, very crucial. And if you don't see a very confident chance that we're gonna see some good growth soon, there's no point to play options. And
mm,
so in the last couple of weeks, when I see, okay, strength is kind of falling, I've seen a lot of economic news that we're still waiting for. It's been iffy. Also, with all the earnings that have come in, we've it's been not the greatest. So it's kind of becoming a stock pickers market where we're seeing not even sectors but even subsectors start outperforming one another. So for example, with Nvidia, we'll just go to Nvidia real quick. This does not, even though we're in those leaps still, this does not make me want to aggressively add and continue playing. Just because when those earnings came out, everything was good except the fact that data center numbers were not great. Like it was honestly pretty bad. It was slowest sequential quarter over quarter growth that you've had since 2023, and that puts a lot of risk on names like AVGO that we are going to see have earnings. So because of that, you've already seen stuff like, okay, XLRE is currently flat, right? But
mm,
if we're going to X, which is the data center, or since look at this, since the beginning of the year, we're basically making new lows almost. Look at that violent drop. We kind of recovered when the rest of the market recovered, and now we have new losers, and the new losers in the real estate sector are the data centers. It's not only Equinox. You could look at something like DLR as well. DLR is also starting to have some downturn. But on the other hand, and this is very surprising, if you look at something like SLG and VNO, these are getting an uptick. And this is surprising because what these are New York real estate stocks. And usually
mm.
these only get upticks when people are betting against like a recession. Like people do not buy New York real estate when a recession is coming. Like this is a strong bet that rate cuts are going to happen, that like the global economy is going to start to grow, stuff like that. Like this is a sign for me that we won't go into recession. This doesn't mean I start playing New York real estate names. This is just like a sign. Like you could almost just take it as data. Like,
Right.
okay, now people are starting to buy this. This could mean that odds for a soft landing, which we've already seen has rose to like a 70% now, 68-70% for soft landing. It's like 20, it's like 15% for hard landing. So odds are things are probably gonna end up being okay. But for Nvidia and data centers, we're gonna have to see how AVGO goes. Also, something that's super like that tells me this is a stock pickers market is we could see GE Veranova start to basically crack and break while we have something like start shooting up. And basically this is like earlier, like markets have different kinds of like themes. I don't know how to say it, but like there's some types of markets where damn near everything will go up. And then there's certain types of markets when it's going to start to stay more flat. And this is because you're going to have certain sectors and subsectors start outperforming and underperforming. And so this is the time to really look into like good names to get into, and you're gonna actually have to pit companies against each other and see which ones are actually gonna outperform and be the best, rather than just to put a general like shotgun spread into the market and hope like everything rises, you know?
Right.
Also, what I wanted to talk about is AEO. This is a pretty like unusual thing for me. This is crazy because okay, American Eagle Outfitters trades at a P&E ratio. Okay, I guess I should start by saying this first. Usually, if we look at, I had this pulled up right here. This is IWN is value, IWO is growth. So if you see value versus growth, usually growth is the winner. So you could see value underperforms growth most of the time. But we are seeing a little bit of holding here and an uptick back up. And what kind of goes along with this is stocks like AEO, where they're at a 8 times P&E, absolutely demolish earnings, absolutely demolish. And we have SPY at a 22 P. And usually, like value names, like obviously not every value name is gonna go up, but there's at some point where it's so undervalued where it makes sense to buy. And for AEO, it's that situation because with the same amount of revenue, they increased how much like margins they have, which increases their P&E as well. And at an 8 P&E for a company like this, and they only really started their campaign or their ad campaigns like a couple months ago. I see this continuing on till at least the end of the year. Their continued success with their jeans and whatnot.
Yeah.
So
You gotta thank Sweeney as well.
yeah, for real. They definitely changed like the entire game. But this
Yeah.
doesn't mean that every company like that every like clothing company is gonna go up. Like Lulu, they won't continue to get away with selling $100 shirts or whatever they sell, like leggings or so. It once again, this is a stock pickers market where within the same sector you're gonna have to find certain companies that are performing well and certain ones are gonna be underperforming. So we're gonna have to really be very diligent with what we put our money into and when we do it.
What do you think about Intel since Trump got that the government now owns 10% of it?
Yeah, let's take a look. I mean, it's been holding pretty well, and like I wouldn't necessarily go long, but if you could sell, like you could generate premium against it, but I still wouldn't go long Intel.
Yeah.
Yeah. But right now we're seeing a lot of like heavy resistance this region right here from where sellers were before. So it just shows you people are still trying to get out of the stock, like bag holders. And that's not something you usually want to get into because even on the way up, you have all these people that have shares that will continue to sell on to you. So usually one of the best strategies to like this seems like really simple, but you want to pick stocks where almost everyone is winning because then people have no reason to sell. So, such as, I mean, this isn't a, like, for example, we'll do Rocket Lab, right? 90% of all I'd say 95% of all Rocket Lab owners are in the profit. So they have no reason to sell their shares. So what we enter here is it's just going to be price discovery. And this is where I would want to be rather than a age-old long like company that's kind of failing, that has a bunch of sellers that are bag holding, that if it goes up would be happy to sell down to you and buy another company, you know?
Yeah.
So that's the reason why I wouldn't buy something like Intel.
Got it. Makes sense. Good insight. Thank you.
Yeah. Also, what like this like caught me. I missed this, but there's this company called Insmed, and basically they popped to like 116 on FDA approval, and then they continue to climb, and now they're at 143, and no one's talking about this. And same thing with this stock. Basically, they're the first generic on GLP-1, and they're performing pretty well, and no one's really talking about it. So these are names that might be interested in getting in. Yeah, basically that's where my head's at right now. We still have to wait for NFP tomorrow. That's a really big data point. But let's take a look at market breadth. I haven't taken a look at this beforehand, so we'll just do this live. Yeah, see, this isn't really, so we have less names than we did before above the 50-day moving average while we're going into all-time highs. That doesn't really show me a sign of a lot of strength. You get what I'm saying?
Yeah.
So it would I think it's still time to be cautious. I feel like there still might be some sort of dip, but in the long run, I think we're still aiming up to go higher and there won't be a recession. But still, it's gonna be a tricky market. It won't, I don't think it'll be easy, at least. We'll,
So,
we'll really have to be really diligent about what names we go into.
what's the goal for tomorrow? Like, what are we seeing that could go bad or go good?
Basically, basically, we just want the number to be good, to be honest.
Yeah.
And
Right.
if that's good, that supports the economy, and it like gets rid of worries and tensions,
Right.
and it'll bring a lot of people back into the market.
Agreed. And probably that will be the buying time before Powell announces his rate cut.
Oh yeah, that was one more thing I wanted to talk about. I was looking at like I kind of threw this like at 4 a.m. yesterday. I was looking at something like RKT
Mm.
and also Affirm. What RKT is, they're a Rocket Mortgage,
Yeah.
and they also recently acquired Redfin. That's why like their earnings are gonna, cause they just spent a fuck ton of money to acquire Redfin. The
Mm.
numbers are a little bit skewed, but I think it'll still work out because Redfin's like a pretty big real estate company or brokerage, or I think that's what you call them, broker. Yeah, real estate brokerage. And Rocket Labs, which does mortgages and lending. With rate cuts coming in, that would help both their mortgages, their lending, and also their real estate front. And the P&E on Rocket Lab, I mean, not Rocket Labs, Rocket companies is pretty low. So I feel like, and the stock chart technically. So there's always three things I look for, right? The stock chart, the technicals have to look good. And then fundamentally, is the company doing well? I think so. The numbers are a little bit skewed because it just acquired Redfin, but I think it still looks decent. And lastly, macro. Does the macro climate support the stock with incoming rate cuts and signs of like a recession not happening? I think all three things line up and this ends up being like a good buy. So moving forward, as long as we look at like the three things, the fundamentals, the technicals, and the macro, and we pick good stocks, we'll be fine. But it is going to become a stock picker's market, I'm pretty sure. If we look at a firm, I'm also have my eyes on a firm as well. Same situation,
Even with
rate
all those people
cuts.
not paying they're paying their firm back.
Yeah, so I think so. The only thing that scares me from entering a firm is I think people might already be front running, and it might be a buy the rumor, sell the news type situation where everyone's trying to buy ahead of rate cuts, and then rate
Hmm.
cuts actually happen, and nothing actually goes on from there. At least in
Right.
certain names, where they're
Right.
already heavily front ran. So that could be a situation that happens. So I do want to keep an eye on it. It definitely could continue to go higher. We do like something like this because this is just steady, consistent, going up. It's pretty good. And the fundamentals of the company, like it looks all right as well. But with the rate cut, it should boost them a little bit. Yeah. Any questions? Any like regular questions as well? Maybe about options, about contract pricing, about anything, guidance, about how much money to spend, how often to trade, or
Well, I
whatever.
haven't played options in a while, so I think I want to start getting into some leaps
Yeah.
soon, and I definitely want to start messing with the algo again. So I think, will you have another call soon about that?
Yeah, I might. So I dropped the guide. I'm waiting for people to download it and get that set up, and then I'll probably do another like call like this and then get people situated. Apple doing really well though. I really like how this went. Oh, also like I guess we could talk about this. I already kind of talked about this, but with gold rising, it's like another like I'm fine investing in this area when gold is plateauing and the market is rising, but when gold starts to break out again, my spidey senses go up. So that's just like another sign of, oh, okay, something may be coming. It's like you got to really stay on your toes about right now until everything gets situated. I think towards end of this year things will calm down, everything will be fine. This year was just like a pretty hard year to trade with fucking Trump pump faking the market every second, economic news being bad, being wrong. Like they literally changed the data and then we should have had a rate cut. Like it's been a mess. It's been a mess of a year. So don't really beat yourself up. It'll get easier. But as long as we look at key names, like, and look at those three things, make sure the macros, the fundamentals, and the technicals align, you're probably still set. Just like make sure you're getting into quality names rather than just like shotgun spreading, you know? Yeah, but that's about it.